Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello, this is Top Stock Picks, and I'm Jeremy Mullen with mine, which is Spotify, ticker SPOT. Now, Spotify provides music streaming and ad-supported services to its subscribers. It's a Zacks rank number 3 hold. A recent positive catalyst has me very bullish on this stock. A little bit about the company. Spotify is headquartered in Stockholm, Sweden, and it has almost 6,000 full-time employees. It was founded in 2006 and operates in 79 countries and territories. Now, Spotify came to market in 2008 as a direct listing IPO. And what this means is that the company didn't sell new shares to the public to raise additional money. The purpose of the IPO was to let existing shareholders and employees exit if they wanted to. Now, the stock held up after the IPO, actually went higher. So this has become a new trend in IPOs with just direct listing. Now, the positive catalyst I referred to was Joe Rogan and his show, The Joe Rogan Experience. Now, Spotify entered into a multi-year licensing deal with Rogan recently, and his podcast is actually number 2 on Apple's U.S. podcast chart, so very, very popular. The stock moved from 160 to 190 in just a few days because the bulls think that Rogan could be to Spotify what Howard Stern was to Sirius Satellite Radio, which helped the stock move 300% in the last few months of 2004. Really put Sirius on the map, gained a bunch of listeners, and Sirius kind of took off from there. Now, podcasts are one of the fastest growing elements of the Spotify platform. 75% of Americans are aware of podcasting, with over 100 million currently estimated to be podcast listeners. This is expected to jump 164 million listeners in 2023. So Spotify is trying to position themselves as to be the first in audio with this podcast growth, not just music streaming. So think of Spotify, not just as music, but also podcasts, also podcast content. And going on the fundamentals, the company has a market cap of about $32 billion with $7.5 billion in sales for 2019. Earnings are still in the red, but investors shake this off as Spotify spends on content to grow. Think about Netflix. Netflix spends on content to grow. Spotify is doing the same thing. The Joe Rogan deal is an example of this with a licensing deal worth of $100 million. Now, in late April, the company reported Q1 earnings with a 47% upside surprise. Total monthly active users were at 289 million, and total premium were at 133 million. MAUs were up 32% year over year, while premium subs were up 31% year over year. The company will try to increase subs by offering a 3 months of free premium memberships, and that deal just started recently, and I personally took that up as I was only a free listener, and now after my 3 months I might go to premium, and I like it so far, so I might. Now, looking at the technicals, we're going to take a look at the chart. So here's the chart over the last year, and the previous high was at the $200 level back after the IPO. So what I do is I draw from that level to the recent lows, which were 103. We had a 61.8% retracement level. Now you can see, boom, hit it, back down to the 110, up, down, back to the 61.8, back down to 110. So we had 110 support, 61.8% resistance at 160. So what happened? Well, they tried to sell it again here, but we had some nice earnings. This was the earnings report back in April. They sold it, but the Rogan news took the stock up, broke this resistance. This gives me targets of 255, which is the 161.8% retracement level. Now, of course, the highs are going to form resistance, so we're having trouble at the 200 level. It backed off with the recent market sell-off. So looking for a trade location when to get in the stock, we can target the 200-day moving average. It's 142, 158, and this 21-day moving average, which is momentum. If the stock gets back up over this, we might not be able to buy at these lower levels. So be careful if you do want to get on. Don't be too picky, because if this gets back over 190, we'll be at 210 soon, and then your longer-term targets once again are at the 250 area. Okay, well, that's it for me. That's my top stock pick in Spotify. And now off to Dave Boren with his.
Hey, thanks, Jeremy. My top stock pick of the day is Tesla. And this is not the first time I've chosen Tesla as my top stock pick, but it's a great company. Now, I'm going to go a little bit off course here, and I'm going to talk about a different company as I explain why I think Tesla is such a good stock. We're talking about Nikola. Now, Nikola is, other than the apparent ripoff of the name, where they use the name of the first name of the electric engineer that Tesla is named after, Nikola is a company that also makes electric trucks. They announced they're going to have a consumer-level hybrid pickup. And they even have exciting technology because they got hydrogen also as well as electric technology in their trucks. So it's a neat idea, but it's a new idea. Nikola is a pretty unproven company. They're a special purpose acquisition company, an SPAC, which means that they were formed corporately for the purpose of acquiring new technology, but not necessarily with any business plan of their own. Now, there's nothing wrong with this. There's nothing shady. I know it sounds a little shady. I even own a special purpose acquisition company in the Marijuana Innovators portfolio. It's fine, but it also, when it's a company like this, it deserves a little bit of extra attention on your part as an investor. So Nikola has some great technology. They rallied over 100% last week. They've fallen back a little bit since then, but they're getting a lot of attention. Now, on the other hand, Tesla has sold over 1 million cars. They're going to have $27 billion of revenue this year. They're going to have $39 billion next year. All right, they're going to make $4.60 a share this year, and next year it's going to be almost $13, $12.86, give or take. So this is a company that's already selling products to the public that are valuable and in demand, and developing their electric truck, semi-truck technology behind that. So I think Tesla's a much better bet than Nikola. I understand the idea of wanting to own a company at ground level. I fully understand why people might want to have a few shares of Nikola as an interesting bet, but Tesla's a real company, like a solid, profitable company with products that people want. And Nikola is like, So anyway, Tesla's got a semi coming. They got a pickup truck coming. It's only up from here. Nikola's a flash in the pan. Tesla's the real deal, a real company with products in demand and selling them at profitable prices to customers. That's why they're my top stock pick of the day.